InvestorIdeas.com podcast.
Good afternoon. Welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, going to be looking at a few public company announcements from One World Pharma Incorporated, trading on the OTC as OWPC. Also looking at Cannabis Growth Corporation, trading on the TSX as Weed and the NASDAQ as CGC. The Green Organic Dutchman Holdings Limited, trading on the TSX as TGOD and the OTC as TGODF, as well as Clever Leaf Holdings Incorporated, trading on the NASDAQ as CLVR. So first today, starting with One World Pharma, a U.S.-based fully licensed pure-play hemp and cannabis ingredient producer in Colombia, who announced an agreement with Isaiah International LLC, the holding company of its CEO Isaiah Thomas, to invest $3 million into One World Pharma. Now, the $3 million investment will fund the expansion of farm operations, additional certifications for THC seeds already approved by the government of Colombia, as well as a build-out of a GMP-certified state-of-the-art THC and CBD extraction facility. The investment will be made in installments over 6 months, with the first tranche of $25,000 or $250,000 having already been funded. And the farm expansion through this funding is expected to allow One World Pharma to significantly increase revenue in the second quarter of 2021 through the increased sale of seeds, newly approved cuttings, and extract oil. Now, Isaiah Thomas makes this substantial financial commitment through Isaiah International based on his belief in the bright future of the global cannabis market, which leading research firms assert will reach $47 billion in annual sales by 2025. We could be no more thrilled when Isaiah Thomas assured the role of CEO he lent us his good name and his world-renowned leadership and business acumen, and today he provides the funding for the company to truly execute on its plan to become a leading international supplier of the finest cannabis ingredients, stated Dr. Kenneth Perego, OWP's executive chairman. Now, Isaiah Thomas, on behalf of Isaiah International, stated, "After extensive analysis of Colombia, the world market, and these most recent developments of the company, I passionately believe there is a tremendous opportunity to build a world-class, valuable, environmentally and socially conscious company that is a significant player in the global cannabis and industrial hemp industries. There are few, if any, reliable industrial-scale global cannabis supply chain companies in this space, and we intend to be one. And I'm pleased to initiate this next chapter of growth." So, again, you're continuing to see a little bit more investment in the Colombia space. There's been a few other news releases over the last month supporting similar sort of fashions going on. When you're looking at Latin America right now, you're starting to see a lot more attention to that and a lot more attention to the global industry. Again, as there's more and more expectation around federal changes and regulation changes in the U.S., there's a lot more expectation on how quickly that's going to open up the global import-export industry. And then again, you're going to start seeing a lot of these companies who have been playing sort of the long-term game and looking at global initiatives and global supply chains are going to have a significant advantage on the global cannabis community. So One World Pharma, definitely a company I've mentioned before and one to keep a track of when you're looking at the Colombia region of production. Next, looking at Cannabis Growth, who today announced its financial results for the third quarter, fiscal 2021, ended December 31st. We delivered another quarter of record net revenue with growth across all businesses led by an improved commercial and supply chain execution, said David Klein, CEO. We are building a track record of winning in our own core markets while also accelerating our U.S. growth strategy and the momentum building behind the promising cannabis reform in the U.S. We are executing against our cost-saving program with several initiatives already completed and more underway to build a leaner and more agile business, added Mike Lee, the CFO. These cost savings, along with our top-line growth and continued cost discipline, puts Cannabis firmly on a path to achieve profitability during fiscal 2022, with further improvement anticipated beyond. So with their new strategy in place and their organizational changes complete and their operational cost-saving programs now underway, the company is in a position to establish the following medium-term financial targets. So a net revenue of continued annual growth rate of 40% to 50% for the full year 2022 and full year 2024. Positive adjusted EBITDA during the second half of the 2022 and 20% adjusted EBITDA for the full year of 2024, and expecting positive operating cash flow in the full year of 2023 and positive free cash flow for the full year of 2024. You can also see Cannabis Growth. What you're seeing now is kind of the change up from what you've seen in the past, where you saw big surges in the stock price leading up to, again, these financial results, and then a big sell-off was on the day of. Now you're starting to see that just continues to be an upward trend. Lots of the companies in the cannabis space over the last little while have been trading quite well, and you're continuing to see that a lot of them are moving in an upward trend. Barring any sort of weird disasters that any of these companies sort of run into, most of them are going to probably be on a pretty significant upward trend for quite some time. As this industry does continue to have record sales, and there's more and more interest going on a global scale every day. So it'd be very surprising to me to see any of these companies really get burned out hard now, at least in the next year, where you're starting to see investor interest is at an all-time high for this industry again, as well as just consumer interest in the cannabis industry is growing and getting more aggressive day by day. Next, looking at the Green Organic Dutchman Holdings, who also announced preliminary unaudited revenue for fourth quarter 2020 and provided an update to the previously provided 12-month Canadian revenue forecast for the period of November 1st to October 31st, 2021. So preliminary and unaudited consolidated gross revenue for the fourth quarter 2020 is expected to be approximately $10.9 million, reflecting growth of 235% over the prior year and an increase of 91% over the third quarter of 2020. And this reflects a significant progress and growth achieved in the Canadian operations and sales, which accounted for $8.6 million of the fourth quarter 2020 gross revenue. Our increase in revenue reflects the collective efforts of the TGOD team, resulting in improvements in the quality of our flower, which is being well received by the market, said Sean Bovington, CFO and interim CEO of TGOD. We're also encouraged by the traction we are gaining with our highly Dutch flower and hash, and look to continue expanding distribution of these along the new premium flower strains and 2.0 product offerings, though we are monitoring the effects of the COVID crisis and is having on its progress. So while the revenues achieved for the fourth quarter were encouraging, the company continues to assess the economic climate post-year end, specifically with many provincial governments imposing lockdowns and stay-at-home orders due to COVID-19 and some revisiting listing mandates. The company believes these measures will hamper the rate of revenue growth in Canada that was expected in the first half of 2021 and impact the timing of market entry for its new sativa strains and some new 2.0 products. Now, without these conditions, TGOD would expect to be able to meet the prospective forecast. However, TGOD now notes an increased risk in achieving the prospective forecast of $61.5 million for the net sales, and as such, it expects revenue to grow at a slower rate, with the revised Canadian net revenue forecast for that period being in the range of $40 million to $45 million. So, obviously, playing it safe right now. TGOD's been burned many times in the past by sort of overestimating some of their numbers. I do think, though, that even with lockdowns and even with COVID measures, you're still going to see pretty aggressive cannabis sales you did for the last year. And I don't see any of the provincial governments having stricter lockdowns specifically to cannabis-based companies, as you haven't really seen any outbreaks come from the cannabis industry in Canada over the last year and a bit. So realistically, I would expect the sales to continue to go up. If there are further lockdown measures and they get more aggressive, there's the possibility of, again, some sort of financial aid from the Canadian government. That, again, will also bolster sales. So I do think that when you're looking at the Canadian market, yes, there's going to be always some difficulties, population-wise, retail infrastructure-wise, but I do think now that the ball is kind of rolling in most provinces, and most consumers have sort of picked a few dispensaries or online sites or something for a pretty steady supply of their cannabis, and nobody's going to be stopping anytime soon. And most people are getting more interested in cannabis and buying larger and larger quantities as opposed to less and less. Your tolerance goes up pretty quick for cannabis, especially if you're looking at it for medical reasons. You're going to be buying a pretty steady supply. And for recreational users, again, I would be very surprised to see the numbers drop by any measure over the next year. I think that you're just going to continue to see an upward trend as more and more people see cannabis as a pretty easy go-to option, especially with the beverages, which TGOD has done pretty well with. And I do think that that part of the industry is starting to gain a lot more traction now and will continue to gain more traction over the next coming years as more people look for alternatives to alcohol. Lastly today, looking at Clever Leaves Holding, who announced its branded nutraceutical manufacturer Herbal Brands has entered into a strategic partnership with Looper Group and True Source Hemp Group to import the company's first commercial shipment of CBD into the U.S. Now, Clever Leaves Colombian facilities are the first and only cannabis operations in Latin America to have a good manufacturing practices certification from the European Union. That's not really true. There's a few other companies that have the same standards. Now, this partnership will capitalize on both Clever Leaves and True Source's combined expertise with the hemp industry, resulting in significant access to high-quality grade CBD products for the U.S. marketplace, said Kyle Detweiler, CEO of Clever Leaves. Now, the CBD industry is estimated to reach $20 billion by 2024, and the company expects its U.S.-based strategic partnership to unlock opportunities to provide high-quality, cost-effective raw materials to the U.S. market. True Source offers Clever Leaves the deployment expertise for an important new market, enabling our company to import its first commercial shipment of CBD into the U.S. Now, this partnership between Clever Leaves, True Source, and the Looper Group is a powerful alliance, and Clever Leaves' expertise in large-scale cultivation, evolving formulations, and industry innovation will provide U.S. hemp commercial customers with access to an unprecedented vertically integrated supply of CBD isolate, extracts, and finished solutions, said D. Williams, TrueSource Hemp Group's president and CEO. And the first shipment is successfully cleared customs in the U.S. for the first quarter of 2021. Again, more companies focusing on this U.S. market. There's still a lot of room for CBD in the U.S. market, even though it was kind of overflooded in the first year when you had CBD access. That being said, a lot of those companies really screwed it up and produced a lot of shit product onto the market. A lot of them really ruined their sort of branding and marketing opportunities. And more you're starting to have, again, consumers be aware of what they're looking for with CBD products. They're looking for full spectrum or partial spectrum. They're looking for higher grade, higher quality. They're able to test them. And I think because so many customers were burned in that first year with the sort of snake oil version of CBD, a lot of people now, when they're buying it, are looking for more official sources and looking for companies that have a little bit more grounding and more standing in the public eye, as opposed to the many versions of just private online or companies that are selling a lot of this CBD isolate that's coming from China or different parts of the world, filled with heavy metals, filled with impurities, and also usually not containing enough of the CBD or containing just the basic CBD isolate, which doesn't activate properly in your system. So I do think there's still a lot of room for global companies, whether in Canada or other parts of the world, to import into the U.S., to import globally as well. The CBD industry is not slowing down anytime soon, especially, again, as more and more health and wellness sort of advice moves toward anti-inflammation and immune system boosting components, and CBD does that very well. And I think more and more doctors and more of the medical community are starting to back that up. You're starting to see more clinical data and evidence supporting that. So it would be very surprising for me for the CBD industry to slow down at any point, especially, again, when you're looking at it on a global scale. It's getting real aggressive, and you're starting to see it starting to pop up in Southeast Asia, which is a massive market potential. And I do think that for a lot of these companies, entering into the U.S. is a good start point to build your brand. And then you can look at more the EU as well as, again, Southeast Asia as the next big target areas. That's all for today's podcast. Enjoy the rest of your Tuesday. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.